fallacy that I'd like to point out, which we talk about a lot, but I don't think it's one people take seriously, is the one about inertia. And it's like, oh, I have this thing. And so you just, when you look at your portfolio, even if months or years have gone by, you just don't stop to ask yourself, do I still want this thing? Because it's already there. So it just takes more effort to sort of say, and you know what the obvious workaround to that is. I've brought it up to listeners quite a few times, but I doubt people take advantage of this. It's saying to yourself, if I did not own this thing today, would I buy the same exact amount today? Because that's literally what you're doing when you hold something, right? You're saying, yeah, if I didn't have it, I'd buy it today at exactly the same price. Tax considerations sort of bracketed it out. But if you can't emphatically say, yeah, today I'm going to go out and buy, a slug of Greg's sausages, then you should sell it.
Let me let's do this topic because we had this exact question, and we've stumbled into answering it already from both a Patreon and another listener to the show. And I'm just going to quote like our Patreon's version of the question, and it's from our Patreon Zipper, and he's like, guys, I've got a question about trimming positions in a portfolio. I'm a new investor who started this year, been watching the channel, so trying to catch up. I'm wondering about strategies about trimming. The market continues to go up. Some positions have got crazy overvaluation in them. It's making me ask questions. Any suggestions about trimming? How much? How do we answer this question? So back at you, because what you just started describing, and you don't need to repeat it, is like that is a good lens into if you wouldn't buy the allocation in the thing that you currently have, if you wouldn't buy it, well, then you probably shouldn't own it, because by doing nothing, it's essentially the same as saying I would still buy this thing today. If you gave me dollars, I would turn them into this stock. So if you wouldn't buy it, that probably is one of your first reasons why you might trim the position or sell the position entirely.
Okay, yes. So let's take some rounds. Let's each take a couple of stabs at this. So that's point one. I would invite everyone, sorry for being redundant, but in the trades channel on Patreon, what Badger and I are trying to do more and more of and get better at is when we post a trade we make, it's the rationale that's more important. Because obviously we are not teaching people to blindly follow whatever we do. That's just silly. And we are not, it's not financial advice and so on and so forth. We're teaching you how to fish. So recently, I trimmed a little bit of EOS, and there's two reasons why I did that. One, yes, at some point, when a position just balloons so freaking large, like it's just basic risk management. I didn't want to trim it. I really didn't. But I said, I want to get this at least close to 30%. And damn it, it keeps going up, Badger. It's now back to 35%. So, I'm in the same boat. But that's one, like basic, like I have too much of this. But that was only part of the equation. And I already said this, but bears repeating, I had a very clear place for the new money. It wasn't just gonna now loaf around. I very much wanted more Harmony Biosciences. So when I have that combined 1-2 punch, to me it's sort of a no-brainer, despite having complete conviction in EOS at this point.
Yeah, that's good. And you're there. If I sort of framework this a little bit, like there we've got two completely conflicting reasons why you might want to trim. Like you might trim because actually maybe the thesis has fully played out. You had like, I don't like price targets. I hate the kind of concept of that. You believed a thing would happen and that thing has now happened and you kind of won, like you succeeded with that thing. Or maybe the stock is looking rocky. Bad decision by management. They overexpanded. Like macro's gone against them. Like it's looking a bit. The stock itself is looking like it's in danger. And so, but not so bad that you want to sell completely. Like if management have like lied, then I'm out, I'm gone. But if they've made a mistake, like we make mistakes, and if they clearly acknowledge that and they understand that, if I still believe in the company, but my thesis is kind of shaken, but it's still intact. So those are like stock specific reasons to trim because something's happening with that stock. But what you're describing there is the totally different set of framework, which is like the portfolio specific reason to trim. And you could be 99.999% sure this stock is going to go to the moon. You probably are with EOS, but you should still trim if, you don't want to bear that in your mind. I think you're delusional because I do think it's like highly speculative. But even if you're super confident about that stock, there's still the chance it doesn't work out. Something goes wrong, like an asteroid hits their headquarters, right? Anything can happen. And and so for that reason alone, even though you believe in the company, that's a good reason to trim because you're managing your portfolio risk exposure.
You know what now I'm afraid of, Badge, is some like rabid renegade badgers like dressed up as ninjas invading EOS headquarters at night, sabotaging all the wiring and all the plumbing.
Well, this is like the raccoons at your door. Those are the badgers, right? They come to check out your portfolio and see which HQ they need to go and scurry up next.
One more thing about trimming. Back to the trade channel. Listeners will know I recently trimmed 25% of Astera Labs, ALAB. And that was also another reason. To me, that is a company firing on all cylinders. It's got the AI momentum. I couldn't be happier with its execution and its partnerships, and it's just as solid as they come. But yeah, sometimes stock goes up so stinking fast, so soon that the valuations get stretched. And so when I bought it, it was for valuation reasons. But nearly 300% later, over whatever 3 months, 6 months, 3 months period, I asked myself the same question. This stock is no longer cheap. The momentum stuff has got to, I mean, maybe not has got to be as an overstatement, is most likely near a peak or a crescendo. And again, I had better places that felt much safer in terms of margin of safety. And so I prevented myself from binary thinking, like all or nothing. I didn't want to get rid of Astera Labs. So 25% to me felt like exactly what we're calling trim. You never go broke taking a profit. That's from the trader world. And sometimes I think long-term investors could benefit from understanding why that's an important piece of wisdom. And yes, some of this stuff is contradictory because never sell versus you never go broke taking a profit, and that's why this is an art form. But I slept very well at night, having taken some profit and reallocated to something undervalued.
So I think actually I think we've done a pretty decent job of that topic, like when and how you should trim. And no one can tell you the answer to this thing, right? It's very personal. If it's about your portfolio, like no one else's portfolio looks like your portfolio, unless you're one of these idiots who does like copy trading, where you just copy someone else's portfolio. Like, don't do that. It's a bad idea. And you will have your own personal conviction about a company. Christoph and I both own Transmedics, but we have different conviction levels in it, and that's why he wants to have 6-7%, and I want to have like 2%. Doesn't mean either of us are wrong. It's just how it fits within the context of the portfolio and our own knowledge of the thing. Because I don't own it because Christoph told me to buy it. I only did that with EOS. I own Transmedics because I did the work myself, and I didn't do enough of it, which is why I've only got 1.2%.
That feels satisfactory. Yeah.